Hi guys, my name is Michael. Welcome back. So in this video, we'll be talking about one of our favorite topics, and that is gold. So in this video, I want to just give you an overview of the role that gold is going to play in the current economic and financial climate that we're in right now. I'm also going to share with you a few ways on how you can get exposure to gold. I know in the comment section, a lot of people have been asking me about how to buy gold, and that question doesn't really have a direct answer. So I'm going to share with you some strategies to get exposure to gold, because gold is going to be very important. Remember, gold is at the foundation of the current financial system, right? And as we move and as we transition into this new financial system, gold is also going to play a critical role. So it's important for us to understand the role of gold, what gold is doing right now, and why we're seeing this sort of price increase in gold. Remember, guys, I've been telling you guys that we are in a different time and in a different season. Now, in the past, a lot of people might have looked at gold as just, that metal that doesn't do anything. You just buy it and sit somewhere. But right now, gold is a very beautiful investment, right? And it's important for us to see gold in this new light, right? And before going further, it's important to understand that, gold in this financial system represents three things, in my own opinion. The first thing we need to know about gold is that gold is a barometer, right? Gold is a barometer for the soundness and the health of the global financial system. In other words, the price of gold is saying something. Every time you see the price of gold go up or go down, it is telling us something. Do you get what I'm saying? When you see the price of gold going up, what it is telling you is that the confidence in the global economy or in the global financial system is waning. So that's when we see investors are scared. People are afraid of the forecast, economic outlook of the global economy. That's when you see gold going up. When we see the price of gold coming down, what that tells us is that there is confidence in the global economy. People are sort of happy with the way things are. People are confident of the global system. They are confident of the US dollar, things like that. So gold, the price of gold is speaking, is always telling us something. So as we see the price of gold continue to go up, even in the last couple of years, gold has been speaking, right, to those who want to listen. Do you get? So that's the first thing about gold. Gold is a barometer for the soundness and the health of the global financial system. The second thing is that gold is an insurance against uncertainty. So every time people in this financial system feel uncertain about the future, everybody turns to gold. So gold is that asset, that insurance, that hedge against uncertainty. So in times of war, in times of tit for tat tariffs like we're in right now, in times of economic war and things like that, gold is that asset that everybody turns to. Do you get? So gold is an insurance for uncertainty in the global economy. So that's the second thing gold. That's the second role gold plays in the global financial system. The third one, and this is not always the case. This is depending on the time and the season. Gold is an investment, and right now in this climate, right, gold is an investment. Now, gold is not always a good investment, because there are times where gold will decline, there are times where gold will do nothing. But in this current climate that we're in right now, do you get? Gold is a good investment. And if you look at the performance of gold the last 3 years, you will see that gold has been a good investment for those who have been paying attention. In 2002, for instance, gold increased by 5%. Wasn't super high, but 5% at a time when the S&P 500 declined. Do you get? By 13%? Gold was up 5%. In 2023 as well, gold rose by 9%. In 2024, we saw gold go up by 34%. And right now, year to date, gold is up 15%, while the S&P 500 is down 13%. So gold has been holding up for the last 3 years. So if you're someone who has invested in gold in the last 3 years, you will be doing very good right now. And what I'm here to tell you guys is that you have not missed the boss yet. And this is what I've been trying to drum into the ears of people. I have a forecast for gold. Remember last year, I think November or December, I came on here and I did a video and I said I was predicting that we are going to see a $5,000 handle on the price of gold per ounce, in the next 12 months. And so far things have been, we are on pace to meet that target. we are on pace to meet that target. Remember when I was talking about $5,000 gold last year, a lot of the analysts in, Bank of America, Citi, they were talking about gold getting to 2,500 at the end of 2025 or 2026. A lot of them have been revising their target. Right now, I'm seeing that Bank of America is calling a 3,500 in gold by the end of the year. I believe they are going to still revise that target again because gold is going to go further than what they are forecasting. And my prediction is that by the end of the year, we could possibly see a $5,000 handle on the price of gold per ounce. So it's not too late. Right now, we are over $3,000. I know we've gone far, but it is not too late to catch the bus on gold. And because of the climate that we're in right now, remember, these are financial times. So there is a sort of it's important for us to understand that what is happening in the global economy, right, eventually is going to end up in currencies, right? It's going to end up in currencies. And gold is not just an investment, it's also an insurance for your savings, right? We're seeing a lot of things happen right now. Inflation is still, way too high, for everyone's liking. And we're going to see that inflationary pressure go up further, with the introduction of tariffs. Do you get? So we're going to see inflation sort of tick up again. And when we have inflation like this, we all know that inflation, another word for inflation is debasement of currencies, because inflation reduces your purchasing power. So at that point, currency is no longer a good store of value, long-term value. So if you're somebody who is saving for the long term, for college, for house, or anything, currency will not be a good place to put your savings, because what you will do is that the currency will erode your purchasing power. So gold becomes a very good store of value in this climate at this time. So that's the number 4 thing that you can use gold for. So let us get into this article, which I'll just use to explain a few things about gold and give you my opinion. So this is an article from Barron's. It's just talking about gold again. It says here that gold just finished its best quarter since the Reagan administration. The yellow metal may keep rising as uncertainty clouds the economic outlook. It's not too late for investors to get in. Just don't go overboard. So they are reiterating what I've just said right now, that economic uncertainty in the global economy is what is driving this surge in gold. That is their belief, right? That uncertainty in the global economy is what is driving the surge in gold. And they are saying, just like I am saying, it is not too late for investors to get into gold. Some people might say the price of gold, okay, gold has run up here. Is it going to pull back? Is there going to be a pullback? Let me wait for a pullback. But given the factors you get around the world, remember, we have the issue with Russia, Ukraine. Right now we have tariffs. There are so many issues around the world right now. Do you get? And the world is dealing with so many issues at the same time. So it's almost like a perfect storm for gold, right? So there's a lot of tailwinds for gold to move higher, not lower, right? Remember, gold as a barometer, right? When the world is at peace, when everything is settled, when there is confidence in the global economy, the price of gold comes down. But when you see the price of gold going up, it means that people are afraid, people are scared, there's uncertainty. And those uncertainties that are in the world right now are sort of baked in. They don't look like they're clearing up anytime soon. I mean, in other videos, I call these disruptions, right? These disruptions are baked in. As a matter of fact, it looks like we're going to see more disruptions than less. So it's important for us to know that the climate right now is good for gold. So, like they said here, it's not too late to get into gold. And that is what I'm saying to you as well. I'm going to read this one. I said, analysts attribute the gains to a few factors. Perhaps the biggest driver is mounting concern about the US and the global economy arising from Trump's tariffs and a looming trade war. So that's what we've talked about. There's a lot of things, a lot of factors that are pushing the price of gold to new all-time highs. The next paragraph says, it might be tempting to pile in now, but advisors say gold's recent performance doesn't sway their recommended allocation of roughly 3 to 8% of an overall portfolio. So this is what they are saying, is that despite the fact that gold has gone up, they are still recommending that you only put 3 to 8% of your total portfolio in gold. So basically, if you've got $1,000 portfolio, they're advising you just put only $30 in gold, right? And these recommendation is based on status quo, right? They are not factoring the times and the seasons that we're in. Like I said, these are financial times, right? This is a different time, a different season. So on a normal day, right, you could say 3 to 8% allocation to gold, right? But in a climate like this, right, in my own opinion, I believe you should have at least 30 to 40% of your portfolio in gold, because right now gold is a good investment. Like I said, gold is not always a good investment, but in the current economic climate that we're in right now, gold is a good investment. And as you've seen from the figures that I showed from 2022 to 2023 to now, gold has brought back reasonable returns for investors. 5% in 2022, 9% in 2023, 34% in 2024, and right now over 15%, year to date 2025. So gold has been a good investment, the last 3 years, and I believe that gold will continue to be a good investment even as we move into the years ahead, and as we move into this transition of the global financial system. Gold will be a good investment. So that allocation, my recommended allocation is at least 30 to 40% in gold right now. So that's not financial advice. That's just my own opinion. Okay, let's go down here. It says still holding a little gold can act as a good diversifier, and it appears to be in a good spot now with tailwinds that could linger for some time. So this is what I was trying to say in the last video, that gold is a good diversifier, right? A lot of us, I know, we're invested in crypto, we're invested in digital assets, but it's important to have some gold, because in the climate that we're in right now, gold is a good investment, right? And it's a good insurance. So if you're somebody who wants to retain your the value of your money, right, for a future expense, you can pack it in gold, right, while you continue to save. Do you get? So that you don't, your purchasing power is not eroded by the decline of currencies. Do you get? So gold is a good insurance. Gold is a good store of value right now in this current climate. Do you get what I'm saying? So let's go to the next one. He said the easiest way, and this is where we're going to start talking about, how do you invest in gold? How do you, hold gold? Because that question, I know a lot of people are asking me, how can I buy gold? How can I buy gold? But there's no straightforward answer to that, because buying gold, is different for different locations. The way people buy gold in Africa might be different from the way people buy gold in Europe. It might be different from the way people buy gold in Canada, in the United States. So it's all different. So you need to research your location on how to buy gold. But there are three main ways of getting exposure to gold, right? The first one is by buying a gold ETF. You can get an exposure to gold by buying a gold ETF. This is just similar to buying stocks. So you can buy a gold ETF and get exposure to gold that way. That way, if the price of gold goes up, the price of the ETF will go up as well. So you can buy an ETF like iShares Gold Trust, and I think that one is like IAU, and you can also buy an ETF like the SPDR Gold Shares, which is GLD. So you can get exposure to gold through ETFs like IAU and GLD. That way, if you buy those shares, if the price of gold goes up, the price of those shares go up. So those shares track the price of gold. They are like tracking the performance of gold. So when gold is up, the shares are up. When gold is down, the shares are down. So that is one way to get exposure to gold. Another way to get exposure to gold is by buying the gold mining companies. These are companies that go to various jurisdictions to mine for gold, right? Obviously, they mine for the gold and they sell the gold. So if gold is high, these companies make more money. Do you get? And when gold is down, obviously they make less. So you can get exposure to gold by buying the gold mining company. And there are a lot of gold mining companies out there. Usually the best way to get exposure to the gold mining company is to buy the gold miners ETF, which is, an ETF comprising of various gold miners around the globe, right? So it's a way to is a less riskier way to investing in the gold miners, rather than buying just one gold miner where if something happens, the mining company could go under. So you buy the ETF that contains a lot of gold miners, and one of the best gold mining ETF is the Van Eck Gold Miners ETF. I think it's called GDX or something like that. Yeah, it's called GDX. So you can buy that one as well and get exposure to gold that way. You can also buy the individual gold companies if you know what you're doing. There are a lot of gold companies. There are streaming companies like Franco Nevada, Wheaton Precious Metals. We have a lot of gold mining companies like Agnico Eagle Mines. There's so many gold mining companies there. So if you want to buy the individual gold mining companies and you know what you're doing, you can buy those ones as well, or you can just go ahead and buy the GDX, which is the ETF that contains most of the gold miners. So, and then the last way to get exposure to gold is by buying the physical gold, either through your jewelries or, ring or, the bullion or gold bars, depending on what you can get your hands on. But, if you're in countries like Canada, the United Kingdom or United States, one way to buy those physical gold bars is in that store called Costco. So you can go to Costco, you can buy the gold bars, and you can store them by yourself, or store them in a safe, with one of the bullion companies. So most people might prefer, holding the physical gold. And so, Costco can be a place where you can go to get your physical gold bar, or you can buy a gold jewelry because gold is gold, right? So if you know your way how to buy jewelries, right, you can buy those gold jewelries, you can buy a necklace, you can buy earrings, anything, as long as it's gold. Gold is always going to, once you melt it down, it's going to be gold anyway. So those are the three ways to get exposure to gold. And it's so important, for us to understand that role of gold as we move forward, right? And it's such that um it's so, how do I put it, a lot of people that would never consider buying gold before are now looking into gold. A lot of hedge funds are now turning to gold. A lot of pension trusts, a lot of pensions are now adding a little bit of gold in their portfolio. It's because everyone realizes the uncertainty that is ahead of us. Do you get a lot? There's a lot of uncertainty ahead of us. There's a possibility of war between, China and Taiwan. The war between Russia and Ukraine is still ongoing. There's so many things happening around the world that it is now a no-brainer for any sound investment manager, right? That they have to have some gold. They need some exposure to gold at this time. And so you as an investor as well need exposure to gold. Now, gold is not for everybody. I know there are some of my subscribers and there are some of my viewers that might not have, the money or the wherewithal to get into gold right now. Gold is not for everybody. Gold is for people who have a little bit of money that they want to preserve, or probably you're saving for a long-term goal and you want to preserve your purchasing power. Gold will be good for you. It's not good for everybody. So if you just have a little bit of money that it might not be the best for you. Do you get? It's for people who want to who want to store value for a reasonable period of time. So gold is not the kind of thing you buy today and then next week you're going to sell. Do you get? No, it's not that. It's for people who want to store, who want a store of value. Do you understand? So that these disruptions that are on the horizon do not affect their financial well-being. So gold will be good for those kind of people. And then if you're somebody, you're here, I know, and you don't have enough money to get into gold, don't worry about that. You can still continue to invest in your cryptocurrencies. Remember, that is going to be a source of income. That's going to be a source of um um capital as well, in the future. So continue to double down on your crypto investments or other investments that you're in. And remember, this is not financial advice. I'm just saying that if you're not in a position to get into gold right now, right, store up the knowledge about gold, so that when the time comes, when you have the money, when the time comes, you can invest in gold. So a lot of people might not be able to get into gold right now, but when things start to move in the crypto space, remember, when you begin to get your gains in the crypto space, you will then have enough power to get into gold. So at that time, this information becomes relevant. So this information that I'm saying right now might not be relevant to you right now in this moment, but it will be relevant in the future. So this is a timeless video, right? It doesn't mean that because you cannot do it right now, you will not be able to do it in the future. So store up the information, right? Store up the information, understand the ways to buy gold, understand the ways to get exposure to gold, so that when the time comes, you can get exposure to gold. And so it's important for you to understand that even though we are moving into a digital era where everybody is going to be using smartphones, cryptocurrencies and everything, there is still going to be a need for hard assets. There's still going to be a need for offline strategy. And I've said it in a previous video that as a good investor, you must have both an online and offline strategy, because at some point we are even going to see a disruption in the internet, right? And at that time when you cannot connect to the internet, remember, crypto is not going to be available for a while. So you need an offline strategy at some point. So take all this information, store the information up, right? So that when the time comes, you can execute accordingly. So guys, I just thought I'd bring this information to you guys. Remember to like and subscribe if you like videos like this. I know a lot of you are watching my videos, but you're not subscribed to the channel. Please subscribe to the channel. I'm trying to hit a goal, in my subscriber count. So please subscribe to the channel, and I'll see you guys in the next one. Bye for now.